Hi everyone, this is a technical analysis on EURUSD. Let's start with some fundamental background first. The Fed hiked by 25 bps as expected and kept everything unchanged. Fed Chair Powell reaffirmed the data dependency and kept all the options on the table. The US economic data keeps on surprising to the upside, but inflation expectations and CPI readings continue to show disinflation, with the last two core CPI month-on-month readings coming in at 0.16%. At the moment, the market doesn't expect another hike from the Fed, but the next NFP and CPI data will be crucial to confirm or change this view. Moving on to Europe, the ECB hiked by 25 bps and changed the line in the statement that landed more on the dovish side. President Lagarde didn't hint to what we can expect next, and in line with the Fed, just reaffirmed the data dependency and kept all the options on the table. The data for the Eurozone has been consistently missing expectations, but the recent inflation and employment reports remain strong, justifying another rate hike in September. The market, in fact, is expecting a 25 bps rate hike in September. On the daily chart, we can see that EURUSD has been falling pretty strongly since the fake out above the top trend line around the 112 handle. The trend remains clearly bearish as the price has been printing lower lows and lower highs, and the moving averages are crossed to the downside. At the moment, we are seeing a pullback as the price has bounced from the support area around the 10840 level. We can see that we are approaching a downward trend line here, where we have also the confluence with the red 21 moving average, and this is where the sellers are likely to pile in with a defined risk above the trend line to target the 108 handle. Moving on to the 4-hour chart, we can see that the price has been diverging with the MACD right when it was approaching the support area at 10840. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, we are seeing a pullback into the trend line where we can also find the Fibonacci retracement levels for further confluence. A break above the trend line will give the buyers more conviction for a bullish trend, and the first target would be the 11033 level. On the 1-hour chart, we can see that we recently broke out of the falling wedge pattern here, which is generally a reversal pattern, and the target should be at the top here at the 10950 level. Therefore, everything points to that trendline resistance, so it will be a make it or break it moment for the sellers. This week is pretty empty on the economic data side, as we will only have the PMIs tomorrow and the US jobless claims on Thursday. Given the strong appreciation in the US dollar seen in the past weeks, we can expect some USD weakness if the data misses expectations, and we will likely need much stronger than expected readings to see another sustained rally in the greenback. Remember also that this is the Jackson Hole Symposium week, so we will hear from many central bankers, including Fed Chair Powell, who is set to speak on Friday.